Hello traders, we are looking at the Thinkorswim web app and we are in simulated trading, which is the paper money version. If you saw the previous Thinkorswim video, I showed you in there how to create a second instance of Thinkorswim so you can run paper trading alongside your live Thinkorswim account. I've got paper trading open today so I can show you how we can open an automated trade on a put credit spread that allows us to set the UI up to automatically close the trade when we're in profit at a determined amount, or to close the trade when it moves against us for a limited debit. The UI I've got here, I'm not going to go through it extensively today. If you're new to Thinkorswim, you can ping me in Discord and ask for some interface setup videos or some other things that you want to learn about Thinkorswim. But today I'm just going to show you the interface elements that we're using for this particular trade, and I will touch on some other areas maybe of interest as we go along, but it's not a comprehensive walkthrough. The setup I have here is in the settings menu. It's an options setup, so you get the setup that you're seeing here with these navigation elements. I'm in the Analyze tab at the moment. I have Amazon selected, and then you can see here the details on Amazon with the company profile, and by the numbers there's quite a lot of really useful information you can see in here as well. But today we're going to concentrate on a trade. So I'm going to go over to the Trade tab. I have this automatically set up to open the options chain. And what we're going to look at today is something called OCO, or one cancels other. It's a really powerful way of setting up a trade where you can fire and forget. So for those of you that are busy, you've got daytime jobs, maybe you've got 2 jobs, maybe you've got kids, and you can't spend your time tracking your trades, this is a really nice feature that you can use, and it is extremely powerful. So let's take a look at what we can do here. Okay, you can see here that we've got the options chain open, and up here I have vertical spreads open. I'm just going to open that up and go back to the default view. So the default view when you open this is going to be spreads single. And if you look in the center here, you can see a number of strikes on Amazon for an expiration date of 18 June. The reason it says 18 June is because the market is closing on the 18th of June because the 19th is a holiday, and I am recording this video on June 7. I may actually look at this as a live trade on Monday, tomorrow morning, and for those of you that are live in our Discord channel, you'll see that trade if I post it. But for now, I'm going to walk it through as a trade in paper trading, paper money on Thinkorswim. Okay, the trade I'm looking at is actually 240 and 235 put credit spread. So if I look at the 240 bid, I can see that it's 360. And if I look at the 235 ask, I can see it's 279. It's a good idea to take note of these values in this view, because once we move into the what we call a vertical view, those values are not easy to determine. But we're going to use them to help us work out our math on how we're going to set a profit target. We're going to use 70% and a debit limit of 50%. Okay, so let's go back up here into our spreads. Let's open that up. We're going to select vertical. Vertical is another name for a spread because it is vertically moving up and down the options chain. And you can see that our 240, 235 has actually been selected. And you can see that we have a premium of 81 cents. So it's not a super intuitive UI, but you'll get used to it over time. I actually like to have the open interest value set as well. But one thing I will say is we're not doing the technical evaluation as probability traders that we normally do in this tutorial. I'm purely going to show you the trade, but know that we would ordinarily do the full technical range of evaluations before we got to this trade. This is not just jumping in and randomly picking a spread. Okay, so we've got 240, 235. What do we do? Well, in order to open that position or get set up to open that position, we simply just click on our bid. And then you'll see down here, if I just move my blob out of the way, you will see that we're in the order entry tools. And in the order entry and saved orders, we're looking at the order entry. The order entry we can see is a vertical. Note that it's colored red. Red is the color that Thinkorswim defaults to for a sell trade. You can change it in the settings if you wish, but I don't see any reason to do that. But just know when you see red, that's a sell trade. We can see we have the sell and buy. We are automatically set up with 10 contracts. That you can set up by default in the settings menu. We'll look at that in another video. We see the symbol of Amazon. We have our expiration date, and we check our pricing, our sell, our short leg, 240, our buy leg, our long leg, 235. We can see we're getting a credit. We can see that it's a limit order, and it is set for the day. Interestingly, at the end here, exchange, it says best. I don't see a reason to change that. And what it does, it looks across the range of exchanges that handle the trades, and it will pick the best one that offers the best price. If you open that up, you'll see things like CBOE, ISE, but we're going to leave it at best. Now, if we come back to the price, you can see it looks like there's some sort of arbitrary price been dropped into this box. Actually, to determine what's going on here, we have to go down and look at our advanced order, or the expected price line. That's this line down here. So if we go over here, we can see it's very faint, but we see nat, that means natural, and we see mid, which means midpoint. Now, Thinkorswim has an automatic setting where it will set that price at the midpoint. What we need to do for our spreads is just grab that slider. It's the easiest way of doing it. Drag it all the way to the left and set it at the natural point. Now, what natural means, it is the natural best bid and offer. You might see it as NBBO, sometimes abbreviated. And that is because Thinkorswim believes that the spread price at that strike is what the position is actually worth now. And I find that to be the most efficient way of getting filled. You could nibble, you could go 0.82, 0.83, but you really need to be very close to the natural to get filled on a PCS. Okay, so there's our credit, our premium credit, 81 cents. Now, in order to go in and do the sort of two more legs that we're going to set up, the first one is going to be taking profit at 70%. And the second contract or position is going to be setting a debit restriction, a maximum loss of 50%. Now, before we do that, let's go and take a look at the math, because we need to do a little bit of math here. Okay, so I've got my notepad open. Here's the example around the limits for this put credit spread. We're selling Amazon at 240. We're buying Amazon at 235. It is a $5 spread. At the trade details, these are the numbers that we grabbed earlier, just so we have them. We have our short leg at 360. We have our long leg, which we bought for 279. And the important number really we're going to work with is our net credit received of 81 cents. Now, the first calculation is how are we going to calculate our buy to close price for 70% profit? The price is actually 24 cents. The calculation to get there is to take 70% of our 81 cents, which was our net credit, and we do that by multiplying 0.81 by 70%, and that gives us 0.567. So the remaining value is 0.81 minus our 0.567, which gives us our rounded up 0.24 at 24 cents. So we're going to set our buy to close limit order at 24 cents, and you could go up to 25 if you want to be a little bit more conservative. Obviously, the more liquidity you have, the more likely you are to get filled at the price that you calculate. And then the second math we're going to do is our stop loss for 50%, but we'll come back and look at that in a second. Let's do the first one first. Okay, so here's our put credit spread. We haven't opened the position yet, but now we want to open our first additional position. And the way we do that is we come down into these advanced orders, and we want to make sure that we have, actually, let me just open this up. We want to make sure we have this first triggers OCO. The way this is ordinarily set up is on single order. So you need to make sure that first triggers OCO is actually selected down here. Once you've got that selected, you can then come back up under the symbol into Amazon, and you can right click, and we are going to create an opposite order. And you can see the opposite order has been created, and this is the order we are going to set up to take our 70% profit. So we can see it's green, so we know that it is a buy. We can see it's buy and sell. It's reversing our 240.235, which is correct. We can see that it's a debit because we are buying to close, BTC. We can see that it is a limit order, which is correct. And it says day. We don't want that to be day. We want that to be good until cancelled. So we select good till cancelled, and we can come back now and look at our price. Now you can see it's matched our premium, which is not what we want, right? We did our calculation. Our calculation tells us that we want to close this at 24 cents. So we can click in there and we can put in our 0.24, our 24 cents. And now we have got our first OCO. The first triggers OCO works by allowing this position, when this position gets opened and gets filled, it will trigger this position. And if I come up into here now and I do a right click, I can create another opposite order, and that is going to be the second OCO. That is going to be our 50% limit. Again, we can see the buy sells reversed. Here are our two contracts. Nothing's changed on the expiration. The numbers are correct for our strikes. And we can see that it is a limit and it says day. Okay, a couple of things we need to change. It is not a limit. It is a stop. It's a stop order. And it's a stop order at the mark. And again, it's not day. It's going to be GTC, which means good till cancelled. Now we can come back into our mark price, and we can see that the mark price is 0.81. It's defaulted to our premium, our net premium. So let's go back and look at our math on this. And we're looking down here at our stop loss. So our stop loss for 50%. We know the buy limit price is actually going to be 122. How do we know that? Well, we're looking for 50% of our 0.81, our net credit. So we multiply 0.81 by 50%. It gives us 0.40. We then add that to our 0.81, and then that gives us, if we round it up, it gives us our $1.22. Okay, so we've got $1.22. We can go back into the trade. We can come back down here. We can click in here. We can delete, and we can add our 122. Okay, so we now have got our put credit spread. We know that we are going to have a first triggers OCO So the first position to be filled will be this one. It will then trigger both of these and they will be opened. Actually, they'll be queued automatically. They won't actually be opened. They'll actually be worked. They will be triggered once the conditions are met for either of them. So if I hit confirm and send, you'll get a dialog, and then we can check up here that we're selling the verticals, put credit spread. There's our 81-cent credit. We can then see we are taking a 7% profit by buying to close for 24 cents. And then if the stock moves against us and the position moves against us, we limit with a $1.22 buy to close, which will limit our losses at 50. In here, you get some calculations around commissions and fees. My commissions and fees are somewhat different to this because I negotiated with Charles Schwab. You can certainly do that if you have a portfolio above a certain size, and we can talk about that in the Discord channel. Okay, once we're happy with all of this, we can hit send, and our position has now been placed. Okay, I'm going to end it there. There was a lot in that video. I hope you found it useful. If you've got any questions, ping me in Discord. Suggest some more videos if you like this content. This will be uploaded later this evening, and it will be available in our YouTube channel and a link in Discord. And I will see you in the next video.